What's up, MTG Tribe? Did you know that buying a pullback to the 10-week moving average can be a prime opportunity for swing traders? Today, we're revealing 5 steps to properly buy a pullback to the 10-week moving average, a powerful trading strategy that can be highly profitable for both stock and crypto traders. In this video, we walk through each step, starting with identifying a strong uptrend and a valid basing pattern, and culminating in a perfect buying moment. Be sure to stick around to the end where I'll share a bonus tip that could be a game changer in how you approach these setups. I'm Rick Pedicelli, head stock analyst at MTG, bringing you over 2 decades of expert trading insight. Don't forget to hit like, subscribe, and ring the notification bell for more strategies like this. Let's dive in. All right, we have a chart here of Pan W. And before we get into the 5 steps to mastering the setup, let's first go through the moving averages on the chart. We have the 8-day EMA in green, 20 EMA in blue. The red is the 50 SMA. The yellow is the 200 SMA. And this aqua line is the 10-week moving average taken from the weekly chart and placed on the daily chart. This is just an interesting indicator that's available on the TradingView platform. And I don't have it up generally unless I'm looking for a pullback entry off the 10-week moving average. So why we like the 10-week moving average is pretty simple. As you see, it's below the 20-day EMA, but just above the 50-day SMA. And when I first started trading in a cancelum style based on William O'Neill's books, How to Make Money in Stocks, when I was looking for pullback entries off the 50-day SMA, I noticed that the price action would often stop right before the 50 SMA and reverse higher without ever touching the 50. And I didn't realize it, but that was the price being supported by the 10-week moving average on the weekly chart, which, as I mentioned, was just above the 50 here. And that is known as the institutional line of support, as is the 50 SMA itself. But that 10-week MA is just a little bit of an early entry and with maybe less eyes watching. So it's certainly an interesting way to enter on a pullback, not as well known, but we use it here a lot at MTG. So let's get to the strategy of how to buy a pullback in a strong uptrend. First up is one, we're looking for a strong uptrend. We must also see a breakout from a valid basing pattern. So if we look at Pan W here, you have a strong uptrend, then you have your basing action, then you have a breakout. You know, the base can be just a consolidation. It can be a cup with handle over 8 weeks. It can be a flat base over 5 weeks. Any of these valid basing patterns will do. Again, if you're unfamiliar with these patterns, they can be found in the How to Make Money in Stocks book by William O'Neill. But that's what we look for, and we're looking for a strong breakout. And then 2, we're looking for the price action to stall and correct back down to the 10-week moving average in orderly fashion. Now, along the way, there could be 1 or 2 bigger down days. That's fine. But we're looking for the price action to pull back in for the most part with normal action. We don't want to see one day that's down 15% and then 2 days sideways and another 5% down, and there's the touch of the 10-week. That's a little bit too sharp of a pullback and not what we're looking for. And as with Pan W here, we have a pretty normal pullback, which is just what we're looking for. Now, the third step is to look for the price action to show signs of holding the 10-week MA. We want to see some sort of sign of support. All right, we zoomed in here on Pan W, and while the price action doesn't touch the 10-week this week, the next week as the 10-week MA rises, it's above the open on January 8th. And the price action lifts higher with the moving average, which is a sign of the price respecting the moving average. And step 4 is we're looking for the price to bounce off the 10-week MA, which is what it does here the very next day on January 9th, whereas the open on January 8th was below the 10-week MA. On January 9th, the price opens at the 10-week MA and pushes higher. And on the push off the 10-week MA, we want to see a pickup in volume, which occurs on the 8th here as the price moves higher with the 10-week MA, and on the 9th, once again, as the price reclaims the 8 and 20-day EMA, which leads us to step number 5, which is the entry point, which if we're waiting for the price action to show some sign of life off the 10-week, we have the action on January 8th And then we can buy over the high of January 8th, which also reclaims the 8 and 20-day EMAs, which is what we did in the newsletter. We actually started buying around 289 here, and we're currently showing a profit of about, say, 15% or so in PanW. Now, with these setups, every pullback is going to be a little bit different. So there might be a little bit of a difference in the way that, or one approaches the entry. Not all entries are going to be the same. And we'll see that in the next setup in Uber. And so let's go through those steps again with Uber. We have the strong uptrend, the sideways basing action, the explosive breakout here. It's a leading stock, great move out, follows the 8 EMA for several weeks, and then pulls back in. Just typical pullback action. Take two, and really showing a ton of strength as the price action went sideways for a few weeks before it finally broke down. So this is just a normal pullback, though. It's one bar down here where the selling picks up, but that's to be expected after such a big move. So it's a shakeout. And right away, so again, let's just go over the steps. Step one was the breakout from a strong base. Step two is that pullback, usually below the 20-day MA, but above the 50 MA, does not touch the 50 MA. And then step three, we want to see signs of the 10-week MA holding. Does the price action respect the 10-week MA? And here, the price action bounces off the 10-week MA on Wednesday of that week, and then once again on Friday. The following week, the 10-week MA opens higher, and the price pushes higher. And so I believe there is a slight pickup in volume here on January 8th. So that's the price action bouncing off the 10-week MA, which is step four. So we know that the 10-week MA is showing support and then it's pushing higher. So one could look to enter over the prior day's high. Step five, buying over the prior day high and possibly through the 8 and 20-day EMAs if one wants further confirmation before entering. We are also long Uber in our nightly report with a gain of about 9%. And the last example is now ServiceNow. And here we have the step one, strong uptrend, bullish consolidation, showing signs that it's a leading stock, very little corrective action on the way up, holding the 8 EMA. And then we have step two, the pullback, the break of the 20 EMA. Step three, we have the price showing signs of support at the 10-week moving average. Let me zoom in a bit here. So you have one day that's through you have the price holding up here on Tuesday, January 2nd, January 3rd, January 4th, there's a slight undercut of the average. And the next day, the price is right back through. So it's holding the 10-week. And then we have step four, the move off the 10-week MA on a pickup in volume here. So one could look to enter now as it moves through the 8 and 20-day EMAs that day. If we notice that volume is a little bit higher than average or a little bit above yesterday's pace, then we could buy right there. Or we could wait for the close to see volume pick up and then buy right near the close. Or if there's any weakness the following day, one could look to enter there, especially on a pullback to the 8 and 20-day EMA. We missed this setup, this pullback to the 10-week MA in our nightly newsletter, but I think it's a pretty good example of a pullback that I wanted to show. So these are a few quick examples of what to look for in a pullback to the 10-week moving average. Now, there's several different techniques to buy off the 10-week MA, but in these examples, we're showing a more patient approach where we wait for the price to show that it's holding the 10-week MA and then moving off that 10-week MA on volume, and then we're buying. As I mentioned earlier in the video, if you stick around, we have a bonus tip. Well, that bonus tip is if you feel comfortable doing so, you can set a buy limit order and purchase the stock pulling back into the 10-week MA at the 10-week MA without waiting for any kind of confirmation. And yes, that involves a bit more risk as you don't know if the price is going to hold up at the 10-week MA, but we can offset that risk by taking smaller position. And for example, if you wanted to buy, say, a 10% position at the 10-week MA, on the first touch of the 10-week, one could buy to a quarter or a third position, set a stop maybe 3 to 5% away, depending on the stock's volatility, and then add to the position as it moves higher. So if when buying early, that's one way to offset the risk of not knowing if the price action will hold at the 10-week. So there you have it. 5 steps to properly buy a pullback to the 10-week moving average, which are, again, look for a strong uptrend and then a breakout from that uptrend, preferably a leading stock in the group. 2, price corrects to the 10-week moving average in orderly fashion, not too sharp of a pullback. 3, looking for the price to show signs of support at the 10-week MA. Then 4, look for the price to bounce off the 10-week MA, or buying at the 10-week MA itself, but as I mentioned earlier, that involves a bit more risk. And then 5, after the bounce off the 10-week, you want to enter preferably over a prior day's high or on a slight pullback from the prior day. All right, well, thanks for watching. If you found these insights helpful, please show your support by hitting that like button and subscribing to our channel. For more in-depth analysis and to get our top swing trade setups with exact entry and exit points, visit morpheustrading.com and click on Stock Picks. Join the MTG tribe today and be a part of the community dedicated to successful trading. Again, thanks for joining us, and always remember to trade what you see, not what you think.